The cryptocurrency market is buzzing with excitement, but beneath the surface, a harsh reality is taking shape. While headlines boast record-breaking highs and massive profits, the truth about what lies ahead isn't so glamorous. Global economic policies, tightening liquidity, and unpredictable political shifts are creating challenges that most investors aren't prepared to face. The market is evolving, and those who fail to adapt could be left behind. Here's the hard truth. Warning signs are everywhere. Euphoric market indicators, potential cycle reversals, and trade policies could completely shake the foundation of cryptocurrencies. If you think success in crypto is just about riding the wave of hype, think again. The next few months could separate seasoned strategists from those blindly chasing gains. But here's the good news. Challenges always bring opportunities. Welcome to the Chainpoint channel. Now is the time to prepare, to understand the shifting landscape, and to create strategies that not only protect but amplify your investments. But before we continue our talk, don't forget to hit the subscribe button to stay tuned to what is happening in the crypto world. And remember, everything we say here is not investment advice. Always invest wisely. Let's get started. When 2024 rolled around, Bitcoin delivered a jaw-dropping performance, surging by 129%. This wasn't just luck or hype, it was the culmination of major breakthroughs, including the approval of the first Bitcoin spot ETF. Imagine a tidal wave of institutional money flooding the crypto market, legitimizing Bitcoin in the eyes of traditional investors. It's the kind of event that reshapes the game entirely. But don't think for a second that this was just about numbers on a screen. This was a signal that Bitcoin had stepped into the big leagues. The cherry on top? A pro-crypto president in the US, this shift in leadership gave the market a shot of adrenaline, sparking optimism about more favorable regulations for Bitcoin and cryptocurrencies. Yet, as with any storm, there's always calm and potential turbulence on the horizon. For those who watch Bitcoin climb, you might have noticed the support zone between $20,000 and $55,000, where many long-term holders built their positions. This range became a fortress, keeping the bears at bay during periods of correction. If you're wondering whether to join the ranks of these holders, consider this. Such levels often mark opportunities for patient investors to ride the next wave. The only catch? Timing is everything. But while everyone's eyes are glued to Bitcoin, the broader market is bubbling with opportunities. Altcoins and DeFi are quietly making their own noise, and it's worth asking, could their rise offer even bigger gains? Donald Trump's return to the White House has brought with it a new wave of economic uncertainty, and for the crypto market, uncertainty is a double-edged sword. His push for tariffs on major trading partners like China, Canada, and Mexico is shaking up global trade. While this may bolster short-term US economic growth, it also creates ripple effects that could squeeze global liquidity, a critical factor for cryptocurrencies. Think about it. When liquidity dries up, speculative assets like Bitcoin and altcoins often feel the pinch. A stronger dollar, bolstered by Trump's isolationist policies, could become a silent enemy for the crypto market. Historically, the DXY, dollar index, and cryptocurrencies have had an inverse relationship. A rising dollar often sucks the oxygen out of riskier assets. For investors, this means keeping an eye on how trade wars could reshape the balance of power. If the dollar keeps climbing, it might press pause on Bitcoin's rally, even as long-term holders remain steadfast. But let's not forget the potential silver lining. Trade wars and tariffs often lead to innovation as businesses scramble to adapt. Cryptocurrencies, particularly Bitcoin, thrive in such chaotic conditions, offering an alternative to traditional finance. During Trump's first term, we saw a surge in interest in Bitcoin as a hedge against political and economic turmoil. Could this be a déjà vu moment for crypto enthusiasts? Only time will tell. For now, the question is about how the broader market, altcoins, DeFi projects, and stablecoins reacts to this shifting landscape. As global investors recalibrate, opportunities might arise in places you least expect. And just like that, we find ourselves inching closer to the crossroads of regulation and innovation. The crypto world is buzzing as Gary Gensler, the SEC chair known for his tough stance on cryptocurrencies, steps down in January 2025. His tenure was marked by relentless enforcement and a push for stricter regulations, leaving many projects scrambling to stay compliant. But his departure feels like the end of an era, one where the SEC's hawkish gaze kept the market on edge. Could this signal a more lenient regulatory environment? The timing couldn't be more intriguing. For Bitcoin and altcoins, this shift in leadership might bring some much-needed breathing room. The market is already speculating on who will take the reins and how their approach will shape the landscape. For investors, this is a moment to watch closely. It's like a chess game, and every move could alter the board significantly. Interestingly, Gensler's exit coincides with growing pressure to regulate stablecoins and DeFi projects, areas he famously criticized for operating in regulatory gray zones. If his successor adopts a more collaborative tone, we could see initiatives like revenue redistribution in DeFi gaining traction without fear of immediate reprisal. Uniswap and Aave, for instance, are already exploring token holder incentives that could reshape how these platforms attract users. The door to innovation might just be opening wider. Still, this isn't a moment for blind optimism. The regulatory pendulum could swing either way, and the next SEC chair will undoubtedly set the tone for years to come. As the dust settles, the market waits with bated breath, and as we turn our attention to the trends shaping altcoins and DeFi, the stakes only get higher. While Bitcoin often steals the spotlight, altcoins and DeFi projects are quietly carving their paths, revolutionizing finance in ways that even the boldest Bitcoin enthusiasts might find surprising. Some protocols are reshaping user incentives through initiatives like revenue redistribution to token holders. Imagine earning a share of a platform's revenue just for holding its tokens. The rise of these trends signals a maturing market. Altcoins, once considered speculative bets, are proving their worth through real-world utility. Take Chainlink, for instance, which powers smart contracts by connecting them to off-chain data, or Ethereum, the backbone of countless DeFi applications. These projects show that altcoins aren't just Bitcoin sidekicks, they're vital players in the ecosystem. If you're looking to diversify, exploring these projects might just be your next smart move. DeFi, on the other hand, continues to attract users with its promise of financial freedom. From lending and borrowing to staking and yield farming, the possibilities seem endless. But let's not ignore the risks. Smart contract vulnerabilities and regulatory scrutiny still loom large. For those diving in, a balanced approach is key. Research projects thoroughly assess their real-world use cases and only commit funds you can afford to lose. It's a frontier with both treasures and traps. And as the spotlight on DeFi intensifies, new protocols and innovations are emerging daily. The sector's rapid growth raises an important question. How will it coexist with traditional finance and Bitcoin's dominance? That's where the story starts to intertwine with broader macroeconomic shifts. The year 2025 is shaping up to be a tug-of-war between central banks and global markets. With only a single interest rate cut forecast for June 18, the message from the Federal Reserve is clear. Liquidity will remain tight. For cryptocurrencies, this isn't just a macroeconomic footnote, it's a make-or-break factor. When liquidity dries up, speculative assets like Bitcoin and altcoins often lose their shine as investors retreat to safer havens. It's a stark reminder that crypto doesn't exist in a vacuum. Historically, rate cuts have been a lifeline for risk on markets. But a limited cut in 2025 suggests that the Federal Reserve is cautiously treading water, still prioritizing the fight against inflation. This restraint could stall the momentum of Bitcoin's rally, especially as the market adjusts to these tighter conditions. Yet, for seasoned crypto investors, such moments are seen as opportunities. After all, the best entries often come when the market feels the weight of external pressures. Altcoins and DeFi projects could face even greater challenges. These sectors, while innovative, often rely heavily on liquidity to fuel their growth. A reduced flow of capital might slow down their development or push investors to consolidate their portfolios around established players like Bitcoin and Ethereum. For those invested in these spaces, it's a time to reassess risk tolerance and double down on due diligence. Knowing where to allocate resources is more critical than ever. But there's a twist. Tight liquidity could also strengthen crypto's narrative as an alternative financial system. As traditional markets struggle to adapt, cryptocurrencies might attract those seeking refuge from the constraints of fiat-based systems. This interplay between scarcity and opportunity sets the stage for the next chapter, where market sentiment and euphoria could play pivotal roles. The crypto market has an undeniable rhythm, peaks of euphoria followed by sobering corrections. As 2025 unfolds, all eyes are on the MVRV indicator, which has shifted from neutral to high levels, hinting at a market approaching euphoric territory. This isn't just a statistic, it's a psychological tipping point. Historically, when investors grow overly optimistic, the market often responds with a reality check. Think of it as the calm before the storm, or, in crypto terms, the rally before the rug pull. Euphoria is a double-edged sword. On the one hand, it fuels rapid gains and brings new investors into the fold. On the other, it can lead to poor decision-making, with traders chasing pumps instead of assessing long-term value. For instance, during Bitcoin's recent surge, many short-term holders bought in near the $73,000, $86,000 resistance zone, a critical area that might trigger selling pressure. For those entering now, the question isn't just about what to buy, but when, and at what cost. Seasoned investors know that markets move in cycles, and the end of an upward phase can come swiftly. Watching for signs like increased short-term holder losses, currently around 15–20%, can offer clues about market sentiment. If these losses grow, panic selling might ensue, reinforcing a cycle reversal. The key here is preparation. Diversify holdings, set stop losses, and stay informed. Crypto rewards the patient and punishes the impulsive. As the market flirts with these euphoric highs, a new layer of uncertainty emerges. The interplay between macroeconomic factors like interest rates and global liquidity and internal pressures such as market sentiment creates a complex web. Navigating this terrain requires more than just optimism. It demands strategy. And with that, we're drawn back to the broader dynamics shaping Bitcoin and cryptocurrencies. So, after diving into the good, the bad, and the ugly of crypto's next months, what will you do differently after learning about Bitcoin's performance, altcoins' potential, and the looming macroeconomic challenges? Research new opportunities in DeFi, assess your entry and exit points, and stay vigilant for market shifts. And now I want to hear from you. What's your next step? Are you doubling down on Bitcoin, exploring altcoins, or waiting for the next big opportunity? Drop your thoughts in the comments below. Finally, if this video gave you value, don't let the knowledge stop here. Hit that subscribe button, turn on notifications, and join us as we uncover more insights to help you navigate the ever-changing world of cryptocurrencies. I will see you in the next video.